Hello, everybody. Welcome to the Investors Den. Happy New Year to you guys. I know I've not wished you guys officially Happy New Year. I know I've been away from making YouTube videos for a while, especially during the whole of the bear market. The majority of the bear market, I've kind of been away, but um, I had to take a while, to really analyze the market and reevaluate everything, re-strategize before I come out and talk to you guys. Um, my role here is basically really important because I have a community and I have a couple of people who listen to me. So it is my obligation to do my due diligence in informing you guys correctly. I made a couple of mistakes in trading in the bear market. I didn't call it on time, which I mean, you can't always be right all the time. So during the whole of this period, I was researching and I want to talk about two major things that I've noticed in the market. Um, One is really good, and the other is really bad. I'm going to focus on the good part first, just to show you guys the entire thing. And the good part of it really relies on the market cycles dating from the very beginning of crypto. That's from 20, ever since the chart started recording. I think that was 2013 or later than that. I'm using that to evaluate what I think and where I'm going to be putting my money during 2023, basically. All right, so that's enough talking. Let's go to the chart here. All right, so on my screen, um, it's something really overwhelming, but let's not look at this yet. I'm going to get to this, but let's not look at this just yet. Let me show you something a little less complicated. Let's get rid of all those. Remove drawings. All right, so what's left here is just the indicators. No, let me use another chart. Another chart that is old. Okay, I think this will work. All right, so looking at this here, right? There is a couple of things that you can notice. There are a couple of things you can notice looking at this. You can notice there are highs and then there are lows in the market. At this point here, you can see that this is a particular high. At this point here, this is a low. This is a low. This is a high. This is another high, and this is another high. All of these are the high points in the market, and these are lows in the market. Even going back further, all the way down to this point. I don't know if this is all the way to 2015. This data is not old enough, but I hope this can explain what I'm talking about. So before I get into what these highs and these lows signify, let me talk about something called the market cycles. So the market cycles is literally Bitcoin market cycle specifically is dependent on something called Bitcoin halving. Now, this Bitcoin halving happens over a 4-year period. I mean, approximately 4-year period, 3 months and some 3 years and some months actually. So over here, if I show you something real quick on my screen here, you can see that the first halving event took place on the 28th of November in 2012. So the halving event is a situation whereby the reward for mining Bitcoin gets cut into half, basically reducing the supply. How Bitcoin comes into circulation is from these miners. When they mine, when they get rewarded, they then distribute the coin accordingly. So basically, every halving event, the reward for mining Bitcoin gets cut into half, thereby reducing the supply of Bitcoin generally. And when there is limited supply, it's basic economics. When there is limited supply, if even if demand remains at the same level, there's going to be an increase in value, basically. So that is the theory behind this Bitcoin halving event. So the first halving event took place on the 28th of November 2012. The second one took place on the um 9th of July 2016. The third one, May 11, 2020. If we look at these periods on the chart here, I think the first one is the first one is 28th of November 2012. Okay, so now that I've pointed these points out, let me show you how I did my analysis. Right, so this is the full chart. I know it has a lot of lines and a lot of drawings, but it's going to get interesting real quick once I start explaining these things to you. Okay, let me just see if I can do this. Yeah, this is better. Okay, so now you can see the entire screen. So we marked the first halving event date to be 28th of November in 2012. So in TradingView here, we go all the way to 2012. Okay, there's no market data for that. Actually, there's no market data for that. Okay, let's go to the second one, which is 2016 July 9th. 2016 July 9th, which is approximately this period here. So this is the second halving event. All right, this one here you're saying is the second halving event. And then let's look at the third one. The third halving event was May 11th of 2020. May 11th, I think that should be here, of course. 11th of May 2020. This was the third. This was the. That's a terrible line. Yes. This was the third halving event. Now, there's something really interesting about this halving event situation. Now, the Bitcoin cycles occurs for like 1,000 and something days, which is what this blue line is. You see this blue line that you see here? From this blue line from here, all these ones here. This represents a cycle. This represents another cycle. And this represents another cycle. And all of these cycles are dependent on the halving event. This is what really triggers the cycle, basically, and it's basic economics, demand and supply. So check this out, something really interesting. I already talked about this on one of my TikTok and Instagram videos. That's what I've been doing lately, by the way. You need to head over to Instagram, subscribe the Investors Den Academy. Let's say subscribe, follow the Investors Den Academy, follow us on TikTok. That's where I'm like dishing out information really fast. This is more of the long-term analysis, and if you're interested in more information, you should probably come to YouTube. That's where you see everything. Like I said, something really interesting. So I've marked this green zone to be a period where the market basically recovers. Now look at this. This is the halving event, right? This particular day is the halving event that occurred in 2016. Exactly 525 days. Look at this. Maybe not exactly, but within that range, maybe 500 days. Around 500 days before the halving event occurs, Bitcoin actually bottoms out. Look at this. I don't know if you can see this very clearly, but just look at this. This was the halving event. This is the day that the halving event occurred, and this is the beginning of this green zone here is the bottom of the market, literally. And after Bitcoin got to this point, which was 525 days before the halving event, it never got back to that point again. So that's one circumstance, right? Now, another circumstance is in 2020. In 2020, which was another cycle, you can see the halving event occurred in May, on the 11th of May, and 525 days before that, Bitcoin bottomed out again. As you can see, let me zoom in closely. This is the weekly time frame. I should probably remind you of this. This is actually the weekly time frame, and you know that if you're doing real life technical analysis, the bigger the time frame, the more likely it is to be helpful in your decision making. The more accurate it can be. So look at this, right? Look at this. This is the 500. This is the day that Bitcoin actually bottomed out. And if you look at this, 525 days, look at this. After that, Bitcoin never went below that price. All right. And even here at this point, when the market crashed again, we can literally say that obviously this was March 2020. This was literally COVID period. And as you can see, basically what drove the market at that point was the fact that everybody was scared and all that. So people started selling out. So that was not really, that was just manipulation basically, and FOMO. I'll call it FOMO more than manipulation. That was just FOMO. So as you can see, immediately the market crashed, it recovered, and it just continued on the journey that it was. Let's say it was moving like this, it just continued going really. So we can basically just ignore all of this, honestly. Now moving forward, the point I'm trying to make from all of this is that right now the next halving event to occur for Bitcoin has been projected to be when is the date? On the 28th of February. Am I right? Yeah, on the 28th of February in 2024, which is next year. Right. So look at this. I've also marked that period. I don't know if I marked February. Some places say April, some places say February, but I'm giving it like a 3 month um overtime basically. I'm looking at between February to May at the very most, if there is an um offset. So now I've marked this period, right, to be around here. So as you can see, this is April 2024. This is when this is the area that I feel like Bitcoin the halving event is going to occur. So before 525 days before the halving event is basically between November, December, and January of 2022, 2023, which is basically the period where we are now. I believe that after I've just said this, you probably understand what I'm trying to say. I'm trying to say that this might be the bottom of the market, meaning that this might be the time for you to start dollar cost averaging, buying the dip, speculating, diversifying, as the case may be for you. But trust me, judging from these market cycles and all this calculation, I just believe that this is probably something you should be paying attention to. Remember that none of this is financial advice. I'm just giving my opinion and basically just telling you exactly what I'm doing. So it's entirely up to you to follow up. The peak of the market is also something else to look at. So look at this right now. On this same chart, you can see the two peaks of the market have actually happened exactly 500 and something days and 25 days approximately. This is it. This is what I used to demarcate it. So basically the entire cycle is just over 1,005 or 1,004 days. That's the entire Bitcoin cycle. So divide them into half, and this is how you get all this data that I've just put on my screen here. That is looking overwhelming. So my calculation, the peak of the last bull run in 2017 was around December 2017. Look at it here. That's where we are here. Was around December, November, and that period, that was the peak of the market. In 2021, which was the last market cycle, the peak of the market was on October, basically around October, November, that period. So basically what I'm looking at here is that all of this market data, they're really important because historical prices, price action basically helps you to understand where prices might be going in the future. Of course, they are not always 100% accurate, but it can be helpful. So this is 1,400. Sorry. So this is 500, approximately 500 days after the halving event, and then Bitcoin peaks. Exactly 500, approximately 500 days after the halving event, and then Bitcoin peaks. So basically, I just did the exact same thing. Exactly 525 days, or approximately 525 days after the halving event, it just landed us at around October or September of 2025. That is going to be the peak of the next cycle. I don't know what price is going to be. I don't know. I've not done that analysis yet, and I don't feel like I feel like it's a little too early to say that. But this is what I'm saying. I'm saying that the peak of the next bull run is going to be around September or October of 2025. Based on my analysis, remember that none of this is financial advice. So this is the good part of the market currently. So let me now talk about the bad part. The bad part is basically dependent on, still on this broad time frame, is basically dependent on indicators. An indicator called moving average. The most important ones that people look at, the 200-day moving average and the 50-day moving average. So on my screen here, I have Bitcoin's price. Okay, let me just go back to that other one and just hide these drawings and show these indicators. Okay, so this makes sense now. Now you can see it. So the blue, the light blue, is this turquoise blue or green, whatever it is, this one here, this is the 200-day moving average, and the blue one, the obvious blue one, is the 200-day moving average. Now these things, personally, I think they're a bit late when it comes to analyzing. When it comes to analysis, these indicators, I think they are pretty late when it comes to analysis. But if everybody's looking at these indicators, then you probably should look at them also, because sentiments can go into the market. You guys know that once everybody starts selling, other people want to sell too. Nobody wants to lose. So now there's something called the golden cross, and then there's another thing called the death cross. The golden cross is a situation whereby the 50-day moving average crosses above the 200-day moving average. There's no scenario of that happening here. But what's about to happen on my screen here on the weekly time frame is that the 50-day moving average is about to cross. As you can see, it's pretty close. It's about to cross the 200-day moving average, and it's going to look something like this. There's going to be a cross, basically. So this is indicating that the death cross is usually indicates that prices are about to get lower, but they've not really been entirely accurate. So we can't really say that it is for sure, but it is something worth paying attention to, because if, like I said, if most traders out there and most people who are in the markets are looking at something like this, it may very well be dangerous. Because if you look at my chart now, you can see that this thing has literally never happened. Looking at the chart, it has literally never happened since the history. I mean, since the market started recording these data, it has literally never happened before all of this time. In fact, there's neither been a golden cross nor a death cross. Let me just quickly show you what a golden cross or a death cross looks like. If I go to the daily time frame, you should be able to see it clearly. So over here is the death cross. This one here is what is known as the death cross. You can see that the 50-day moving average crossed below the 200-day moving average, and ever since that happened, prices has been going lower. And this happened on the daily time frame. All right. So imagine if this happens on the weekly time frame. It's going to be much more crazier. On the on over here at this side here, you can see that this is the exact opposite of this, because here the 50-day moving average went above the 200-day moving average. This is a golden cross. Two different things. So the fact that this is looking like it's about to happen on the weekly time frame is the fact that this looks like it's about to happen on the weekly time frame is really what has me concerned, and we really don't want that to happen because it has never happened before. So I don't know what's going to happen if it happens, and it most probably is going to happen except Bitcoin pulls off a miracle at this point, which I don't think is impossible. You know, there's nothing Bitcoin cannot do. I'm supposed to say there's nothing God cannot do, but literally there's nothing Bitcoin cannot do. Judging from past historical price actions, literally anything that can happen at any point in time. Bitcoin is known for proving people to be wrong. Every single time people lately, I've been seeing a lot of people talking bad about the markets. Crazy price predictions. I've seen 10k, I've seen 5k. People even go as far as saying that Bitcoin is going to go back to zero. Really? Obviously, that's not going to happen anytime soon. However, it could really get really bad really fast. But if you ask me, I really believe that this range is going to hold for a whole bunch of reasons. For a whole bunch of reasons, and I'm looking at all of this from even the bigger time frame. Apart from the fact that it could be called a flipping, you can see that this area here is the exact area where we are. So maybe Bitcoin is just flipping this area and is doing so slowly. Now look at this all the way from this point here. This is the previous bottom of the market. Now you can see exactly what happened. So if I were to copy this entire cycle now that you're seeing here, if I should copy the entire thing, just to give you a perspective of what the prices might look like, you see that it really looks realistic. So coming over here, and I pick this tool up, and then let's just take from the halving event, let's just take this and let's put it here. You can see that instantly it's starting to make sense, right? It looks like something that can actually happen. Actually, let me do this on a cleaner tab. This page just looks really jam-packed at this point. Okay, so if I decided to do this, let's say I picked it from here all the way, let's say to this point here. Let's say I take all of this and then I put it here. You can see how realistic it looks, right? It looks like something that can actually happen, because literally that's exactly what happened before, only that it even happened faster. So look at this. This is where it will put us at 51,000. Of course, this you can't take this. There's no analysis or anything to back this up. But I'm just saying, just really exposing you to the possibilities of this actually happening. So basically, guys, my opinion, I'm always putting my money where my mouth is. The market hurts me, it hurts me. But what I'm just saying is that this might just be the time to dollar cost average and to really pay attention when there's something that Warren Buffett always says. When most people are bearish, when most people are fearful, be greedy, and when people are greedy, be fearful. So most people are fearful at this point. This is when I think you should be paying close attention to the market. That's all I have for today. I'm going to talk about other interesting stuff throughout the whole of this year. Hopefully I can stay consistent. I've missed you guys. I hope you missed me too. So thank you guys for sticking around, and I will see you next time. Bye.